The information in this podcast is general information and not advice. Stanford Financial is authorised under Australian Credit Licence Number 541480. Further information is available at stanfordfinancial.net.
Hello and welcome to On the Couch with Steve, a podcast where we help you navigate the often complex world of buying and selling real estate. I'm Steve Athanates. I'm the owner of NG Real Estate here in Ipswich, so thank you for joining us. I'm joined today by Steve Beach from Stanford Financial. Great to see you, Steve. Thanks for coming along.
Not a problem.
And guess what we're talking about today? It would be the Reserve Bank announcement in relation to interest rates.
Definitely.
Now, obviously, in our last podcast, we talked about our prediction about what would happen with interest rates. We said that interest rates would go up.
Yep, that's correct.
Now, I'm not, we love to be right, but we're also sad that we're right because obviously there's a financial implication. But of course, if you want to know what's going to happen with interest rates and what's going to happen in the housing market, tune into On the Couch with Steve because we're always right. But they did go up. So congratulations, Steve.
There we go. So, I guess the announcement came out yesterday and we didn't meet yesterday because it was Melbourne Cup and I was betting on horses, but
yes, we had to delay. Our apologies.
But yeah, so they did increase. So the cash rate now in Australia is at 4.35%. I know the RBA and in particular probably the government wanted to hold the cash rate at that 4.1%, but cost of living, inflation, GDP, everything's still increasing at a steadily rate. So they need it to start to curve back down. So inflation, which is currently sitting at 5.4%. Again, the target mark is between 2 and 3%. So a big thing where they've adjusted a lot of their forecasting moving forward. So previously, about 2-3 months ago, they were sort of predicting that the inflation rate was going to be at 3.3% at the end of next year. They've actually increased that to 3.5%. Even after they've lifted the rates again yesterday. So we are still seeing, unemployment's low, wage increasing, housing prices are still going up.
Yeah, the housing prices, and we've talked about this a lot in the past. People thought that house prices would drop. That's far from the case. House prices are actually still going up, and can't see any reason why they won't stop going up at the moment because there's just such an undersupply. It's just not, for a lot of reasons, I don't know why, but a lot of people are not listing their houses for sale. So we've still got a really, really strong buyer supply and half as much stock for them to choose from. No. So that's pushing prices up for sure. Again,
something that was quite topical sort of yesterday and even just sort of reading some articles this morning, they are sort of talking about this increase in rates is going to put so much more pressure on not only the average household, but even a lot of commercial businesses and so forth, because they've got loans on their businesses as well, which is ultimately increasing those repayments. So a benefit to having increasing housing prices is if people, it's not probably the best solution, but, with the increasing housing prices, you can sell and then ultimately get into a cheaper home or sell right out the market for a little bit until rates do come back down. So there's a lot of options out there for a lot of people.
Yeah, look, and I think all the economic factors are probably even conspiring against the government to a point where, like you said, they wanted to keep the cash rates on hold, but their hand's been forced because inflation is not dropping at the rate they wanted to. Obviously, unfortunately, we've got all these wars all around the world in Ukraine and obviously now Palestine, and it's messy. It's really messy, and obviously that's affecting fuel prices and all sorts of things. So, look, whilst a lot of us and a lot of people are still okay, and we obviously hope that everyone is okay, we do acknowledge that all these circumstances just continue to heap more pressure on people, unfortunately.
I guess some positive news moving forward out of it is there's the domestic economy, which is us here in Australia, and then there's a global economy. So the global economy is slowing down. So we're definitely sort of seeing outside, most other central banks around the world have cash rates above 5%. So for us to be sitting only at 4.3, we're actually one of the lowest. So which is a positive factor for us here. Not that it helps because interest rates are now, if you can get a rate under 6%, I think you're doing quite well nowadays. So I guess moving forward is what can we do in regards to that. So again, I think we quite often talk about reaching out to your bank, reaching out to your broker. Banks aren't offering the best rates even when your fixed rates do expire. So we're still seeing a lot of people calling us up saying, my fixed rate's about to expire. My bank's reached out to me and they've told me that my interest rate's going to be 7-point-something%, which is just horrendous. Give your bank a call or call a broker and definitely have a look at seeing if there's better deals out there.
Yeah, look, and I think you see that a lot on TV shows. I saw a show the other day on the news where financial advisors are basically actively encouraging people that if you simply contact your bank, you'll get a better deal if you ask for it. But, and people saying, I don't really want to call up. I don't want to get stuck on the phone and put in a queue. But the alternative is if you could save yourself 0.5% or 1% in terms of asking the question is there a better rate? Yes, it's annoying to have to get on the phone and what have you, but there's a huge monetary saving potentially there.
$50, $100, $200 a week, depending on the size of your mortgage, and that's a lot of money. That's fuel for somebody for the week or a grocery bill, everything along those lines. So every dollar counts at the end of the day, and that's what it's all about. It's just trying to save people money.
So on that note, we would definitely encourage you, reach out to your bank, reach out to whichever financial institution you're with, ask them for a better deal. You can obviously move banks probably much easier than you could in the past. And if your bank won't offer you a better deal, it's time to start shopping around. Okay, so Steve from Stanford Financial would love to be able to help you with that. But like I said, we know everyone's got their set sort of places they like to go and who they deal with. But at the end of the day, ask the question, is there a better deal for me? So, mate, moving on. We've just had the rise. Reserve Bank meets again in December.
Yes.
Okay, what's going to happen in December? People are going to be super hanging on, thinking, are they going to put it up again just before Christmas? What's our prediction?
I think they've striked early. I think in the last podcast I did mention where if they did raise one more, I think it's done. I think that's the last rate rise we'll see for a while. Doesn't mean that they're going to be going down anytime soon. So definitely my prediction is they will hold in December.
I think the same. I think the government and even the Reserve Bank themselves would probably be reluctant to raise interest rates again just before Christmas. So I think it will be a wait, a hold and see what effect this rate rise has on the market. And as you rightly said, I don't think they're going to go down anytime soon. But for everyone out there who's wondering what's going to happen, we're tipping December, no further rate rise. So that's what we're both thinking. No further rate rise in December. So hopefully some good news leading into Christmas. So hopefully that puts some people's mind at ease. Obviously we'll have to wait for the announcement as always next month to see what happens. But we're both tipping no rate rise in December. Now, mate, before we sort of jump off this whole topic, we talked about potentially no rate cuts soon. When do we think we will see some relief for everyone out there who's wondering, when do we get a break?
I guess most banks and economists are forecasting next year still. There's a few changes to the RBA announcements moving forward next year. So, again, it is a board decision. It's not just one person. So Michelle Bullock doesn't stem the whole reasoning for raising rates today. But the new changes is the Reserve Bank currently meet 11 times a year, so every month except for January, because inflation rates are always peak after Christmas and New Year's. But so what they're doing now is they're guaranteed to meet every second month in the quarter. So essentially, so February, May, August, and then November. So they can actually get the full quarter's information through to make an informed decision rather than sort of guesstimating in the first Tuesday of every month. And then they'll meet periodically 4 times when they need to, if they need to actually make monetary changes to the policy. So.
Right. Okay. Well, that's an interesting thing. And I guess the previous governor was criticised about some of his forecasts and were they made prematurely and stuff like that. So that's designed to stop that from happening again, that sort of criticism?
That's correct, yeah.
All right, beautiful. Okay, mate, now, for everyone at home and who's tuning into the podcast, big things that I guess they're wondering is where is the relief? So we're saying no relief probably maybe towards the end of next year.
I think it's still next year will be the first rate cuts. A lot of banks were predicting sort of as early as even sort of April or May. They were sort of forecasting a lot further out now, but I think because they lifted rates yesterday, I think they might still start to see rate cuts towards the middle of next year, so probably May, June next year.
So May or June, okay? So you heard that here first on the couch with Steve. We're hoping for relief come sort of towards the middle of next year.
Middle of next year, yeah.
All right, so everyone hang on. Obviously, if you need help, reach out to your financial institution, ask for help, ask for a reduction in rates. If you have to change banks or financial institutions, so be it. Okay, make the call, get some relief. All right. Obviously, as always, mate, absolute pleasure to have you on the show. You're a wealth of knowledge. So special thanks to our guest, Steve Beach from Stanford Financial. For everyone at home, obviously, we hope you're enjoying the content. If you've got any comments, please reach out to us on the link below here. Tell us what you're thinking. We'd love to hear from you. I'm Steve Athanates. Obviously, I look forward to seeing you on the couch with Steve in our next episode.